make sure you've got at least one chart set up that is what I call a naked chart, meaning it's just the candlesticks. So on this chart, the only thing that's on here are color variations. So your yellow candles are your inside candles, then the blue candles are your outside candles. And that just helps me look at a chart real quick and see the structure and what's going on without having to overthink it, especially if you're doing faster trades on faster time frames. You don't really have a lot of time to try to figure it out. So make sure you have a setup like that, because you're going to want to learn how the price structure of the markets works without the interference of indicators. When you can really see the way that markets move, it becomes very powerful. So I think what we'll do to start it off is just review a little bit last week. I mean, obviously we had some economic data that came out. It surprised the markets a little bit. The markets are what we call a discounting mechanism, meaning in theory, all information of things that can happen is priced in, and the market is always forward looking. You and I both know, yes, there's truth to that, but there's always surprises. For instance, shutting down the entire world's economy, no one could have predicted that. So markets are clearly going to react to something like that. Just real quick, going back to that whole COVID deal, when you see, because I think we fell, what was it, like 30% in a month or something crazy. When you see declines that are that swift, generally speaking, you're gonna get a reverse reaction. Markets are like a rubber band. So if something happens really quickly like that, you often see a real quick reversal. But the key to trading in general that I found is identifying areas of consolidation. So these are the areas you don't want to trade in, but you want to observe market behavior. And these are on the daily chart, all of these yellow candles that you're seeing. So as a newer trader, at least for me, when I was looking at charts, I really couldn't figure out what it was like reading hieroglyphics to me. And I was like, I don't understand how people can look at this and have any clue. But the reality is it becomes very clear over time. And one of the keys, like if I'm looking at cues right here, markets kind of move in areas, I would say. Some people trade with support and resistance, and there is some truth to that, but it tends to be areas. So when I see an area where there's some candles that are sticking out to me, in other words, here I've got outside candles and inside candles together, that tells me a couple things. One, the inside candles are where there's equilibrium. That means buyers and sellers are fighting over price. So there's nothing going on. We're trying to figure out who's going to win. The market is more of a story than it is anything else, more of a story of market makers, how they're going to move it, and then how buyers and sellers react to that. And you start to be able to see the patterns. So what I noticed here is last September, market came up, failed, slowly made its way back up, went sideways, another leg up. But what you'll see is this area has been respected in several points. Right here near the highs, came slightly below for the lows, but right here, the reason I'm thinking that we're strong is you see how markets started selling off, but they didn't come all the way back down to this level. I mean, you could expand it a little bit. They were strong enough to come close, but then make that move and start turning around. So one of my suggestions, if you're a newer person, get a charting system where you can mark these inside and outside candles and just start observing, even if you don't feel like you know what you're looking at, how those prices move, because it's incredibly logical when you start to see it. It's almost crazy. And what you'll find, one thing I want you to understand is market makers are always taking the opposite side of the trade. So their job is to facilitate liquidity in the markets. So if, they always say trading is a zero-sum game. So someone has to be on one side and someone has to be on the other. So if we're going long on cues off of this level back in March, Market makers are taking the opposite side of that trade all the way up. They have to, so that you can buy, right? That's how liquidity is facilitated. So at some point, they can't let their books get too far out of whack, or they're holding hundreds of millions of billions of dollars of potential liabilities. That's why you see that the markets move in a stair-step fashion. You know, they move up, they go down, they move up, they go down. They have to, because there would be no liquidity otherwise. Hopefully that makes sense. So when I'm looking at charts and just longer term market structure, you'll see things constantly when trends reverse that looks something like this. First of all, if we go back a little bit to this region where price started to reverse, we see there was a warning signal. Oops, I gotta do this turkey thing. I think I have this drawing tool on to just keep drawing. We probably don't want to do that right now. There were warnings that we were probably going to reverse. So you start to look for cues on the charts, and those cues are, you see how we've got a little candle, then we've got a larger range candle, and then we've got these little dippy candles that don't do anything. We have this candle that gapped down, buyers took it back up, but there was no follow through the next day. What do I mean by that? Well, if markets are moving up, what's the definition of an uptrend? It's a low, a high, a higher low, a higher high, right? So for good, strong uptrends, we always want to see on the daily chart that those candles, being inside is fine, because that just means potentially market makers are squaring up their books, or just, you know, markets are taking a breather. That's normal to be expected. But we see the next day a big, huge wash candle like that, that's certainly not a sign of strength or continuation. So, you know, say you were trading in this area, and one of the things the strat advocates is on these areas of consolidation, if we have a break below an inside candle, you can trade that direction and you look left for your targets, right? So it's very logical. Our first target, if you're trading that break, would have been here. My drawing tool will work. And then here, you know, if any of you follow Sarah, the strat sniper, I was in Rob's chat room. I obviously learned from him, but Sarah explains things so cleanly and clearly. So I follow, you know, her system, looking left and kind of marking those trends out. But one of the things that you will find if you start to look at chart patterns that you may not have noticed before is price is always going to be attracted back to these areas where buyers and sellers are fighting. You see it right here. These areas of consolidation, they're very, very powerful to trade off of. They're very, very powerful, what I would call retracement areas in the market. So hopefully you can all see that. But if we're following this, we see price came down. It did start to move back up, but again, we got one of those clues here. These candles were having trouble, this inside candle making a move back above. The next one did, but then you see that we start to have a failure. This is just how market structure works, and market makers in these areas where price doesn't go anywhere, they make a boatload of money, because what they do, especially if you're trading options and price doesn't move a lot, you're just going to get chopped up. They are making not only the spread on your trades, but they're also making money because both buyers and sellers are getting stopped out. And that's how you have to think about how markets work. So in this case, you know, maybe some late stage traders, usually the retail traders that are chasing, they're getting long on this candle and they're putting stops, you know, depends, but let's say they're putting a stop here, which is the general rule. You know, you put it below the wick if you're trading out the daily candle. We keep moving up, people get short, they're putting stops here. Maybe this guy didn't get run, but if someone came here on the decline down, market makers move price back up, they're just running stops in here. And folks who got long, they get stopped out here. That's all that's going on. And really, when you see a shallow decline like this, what they're doing is squaring up their books and then getting ready potentially to take that last leg up. When you see this kind of pattern where we have a market top, so to speak, we have a decline, but it's not overly steep. I mean, what was it, 8%, something like that? That's nothing to be overly concerned about. Price starts to reverse and move here. These kinds of areas, what'll happen when price starts to reverse and go back up is buyers will take it up, it'll chop around. Sometimes it'll come all the way back down and fake out the longs before it moves higher. In this case, it did make what I would call a mature higher low and then off to the races. My point being that if you are someone trying to go long after we've had a decline, you don't need to go long right on that first reversal. In fact, that's generally a bad idea unless you're smart enough to know you take a small position and you wait for that second retracement, because it almost always happens in waves of 2 on those reversals. Same with reversals to the downside. You know, if folks got short here, then their stops were on, they were taken out unless they were smart enough to know and just add. So just start to understand general market structure, and then we'll get into what we're looking at now. So Friday is a very key day, especially when you have a situation like you had last week where it looked potentially scary, meaning we have this decline, we have this very nice bullish candle back up that ended up failing, right? No need for concern there because price couldn't go lower. The buyers were too strong. Price did not decline below this level. That is a really good sign. And then we have this inside candle with a break to the upside on a Friday. So what that indicates to me, oftentimes Fridays will kind of set the tone for the following week. I would expect follow through buying on Monday. You know, certainly someone could argue and say, okay, well, we have this downtrend line here and Qs have not broken it. And yes, that is true. So as far as taking some of the swing positions and so forth, I'm going to talk about, I'm probably going to give it some time, because what you'll see is one of two things will happen on Monday. We'll fail and we'll start to come back down, and maybe some of this economic data will be worse than we expected and that down move will continue, or we'll pop through on Monday and then probably have some kind of retracement back to this trend line, but on the other side of it before we move up. So something like we're seeing here. This scenario plays out over and over again. And I will post in my chat room too a fantastic video that talks more about market structure for those of you that are interested, just because the more you can look at the big picture, the better it will make your trading. I mean, clearly you've got to execute. You know, having a lot of knowledge is not going to make you a good trader, but if you understand the big picture using the strat structure and how market makers move the market, it really helps you to buy low and sell high instead of doing what most retail traders do, which is the exact opposite, right? So here you'll see price pop through. It didn't come all the way back and trust that trend line, but we did have kind of a retest to see if price wanted to move lower. So I would expect, and that's generally what happens when price reverses and we start going back up. It will chop around trying to figure out what needs to happen. Market makers will make a boatload of money as they're going back and forth, stopping out longs and shorts and making the spread. So a good sign, we do need more information. We need to see follow through buying. We need to see how the markets react to structure next week. But Qs, for all intents and purposes, this decline, you know, it didn't go as far as it could have with some potentially bad news. So to me right now, until I have more information, I'm looking more bullish. You always want to start by looking at market internals. So what are SPY's, Qs? What's the big picture? What are the markets telling you? So SPY, also very strong, very similar looking chart. Interestingly enough, if you look at the structure here, we see the same kind of thing that we did with Qs, okay? We've got this inside candle price is attracted back to those areas. Why? Again, that's where buyers and sellers were fighting. So they're going to go back there and hash it out again and determine what direction they want to take it. These things become very repetitive the more you look at charts, even if in the beginning it doesn't make a lot of sense. We can see this very clearly on the IWM chart. Got a lot of inside candles in this area. Really, price has just been chopping around. So one of the things I'll often do, just because this has gone on for so long, when I see an area where price just keeps chopping, I'll draw a box around it. And then when price breaks out in either direction, and actually I'm going to give you a little trick here that helps with how market makers do this. You draw a little box around these consolidation areas, and then essentially divide that box in half. I mean, it doesn't have to be exact, but then you just sit there and wait for price to essentially break out one way or the other and then come back and test. So let me see if I can find a stupid little drawing tool real quick. Actually, what I can do here is just a second. So in other words, if price breaks out, that's not the tool I wanted. This is the way. This way, then I would wait for it to come back and test and then move higher, and same on the other side, right? For a fail, that's how you handle these types of areas where price. So you don't necessarily want to trade in there. Certainly you can day trade, but if you're gonna put any kind of longer term swing trade type of positions on there, you don't really want to get involved with, especially with options when price isn't doing anything. They'll just get chopped up. At the diamonds, similar kind of deal. I'm sure you're starting to get the feel for it here. Get these inside candles. It wasn't weak enough to come back all the way down to this level, and we did have that follow through buying. So far, questions on what I've talked about before we get into setups possibly for the week? Does that make some sense? Yeah, I did mean IWM. Did I say something else, Patrick? Very possible. So if that makes some sense, then let's start looking at some of the trades I think are good. I'm going to start off with Baidu, because Baidu reports on Tuesday after the bell, I believe. And we have this inside candle on the daily. I actually bought Baidu as a very short-term swing on the daily chart based on this candle. I mean, really looking back, I could have waited for that follow-through buying I was talking about, because clearly the next day we sold off. However, Baidu, the interesting thing is those options. This is a pretty big decline. I got in about halfway through the day here, and this is a 10-point decline. That option lost almost no value. And you'll see that it held this opening area from last Tuesday. That's a huge sign of strength. I mean, when you really start to read these candles, those little things clue you in on exactly what's happening. You also notice here on the daily chart, we had this down candle that ended that leg of the down move, and price came back and up and chopped around. This is a market maker area where all they're doing is loading out for the next possible buying trend. And you'll see that price came down, but the low here is not as low as this low. So this is what I would call a mature higher low, meaning a bunch of time has gone by and it tried to fail again and buyers were too strong. So Baidu tends to, well, a lot of stocks tend to run into earnings. And when I'm looking at the market structure here, I really like this. We have a mature higher low. We had bad economic news. We had a sell-off. The option price didn't move at all. So I am in, just so y'all know, and this is a trade you could take tomorrow if you so choose. And then I would just be out end of Monday, you could possibly hold through Tuesday if markets look strong, and just be done, unless you're a big risk taker and you really enjoy getting murdered during earnings. I don't in particular. Every now and again, I'll take just a lotto play where I don't care if I lose the entire amount for earnings, but in those cases, I'm only risking $200-300. I don't like throwing money away. But here, we've got this inside candle. We have price structure that's held up. That the contract I bought were the Friday expiry, May 220s, and they're like 64 cents. So anyone in the room should be able to trade those. And one of the things you want to remember with swings, or I guess any position, I don't care if you're trading a 1-minute chart, a 15-second chart, an hourly chart, determine what your trade size is. Do you trade one contract? Do you trade 3, 5, 100? I don't know what your particular requirements are, but whatever that position size is on a swing, only enter, maybe a third of that position out of the gate, because you don't want to put yourself in a position where you blow your whole nut up front. When you do that, you're putting pressure to be right both about time and price with extreme precision. And let's face it, in this case, I thought, because this is such a great candle, strong likelihood we're moving up. Clearly that didn't happen. So I want to be able to add here. I'm not going to add on the down day necessarily, but when I see the next day that we're holding up, I don't mind adding on an inside day. Okay, I don't want to be trading for profit, because you're just going to be chopped up. But if I've got a longer term goal, I don't mind adding necessarily on an inside day, especially when I see that price has been holding that level. So if I'm in a third of my position here, what's that? So I'll add here, and then I may even leave room for 1 or 2 more contracts Monday morning, from the standpoint that we don't know, like, is price going to gap up or down? I don't know. But even if it gapped down just a little bit, still held this level, I would add. And then my target, the way I got 200 was right off the wick of this particular candle. And what you'll find, Rob always says, a 3 is a range expansion or a broadening formation in and of itself. Why? Because it took out both sides of the previous candle, which by definition expanded the range both to the up and to the downside. So with this type of chart, when you're drawing broadening formations, what I generally try to do is find an outside candle and draw my broadening formation off of the outside candle. Again, because an outside candle is a broadening formation. And I tend to cut off the extremes, only because when you're drawing these things, it's not an exact science, but you don't want to draw something that gives you a line like this. That might be unrealistic. You want to be somewhat close to where you think price action can go right here. So when I'm looking at this, I would draw it off of these 2 wicks, because it just flows. And I know that that's more realistic for current price action. If I need to expand that broadening formation, I just clone that particular line and I bring it down to that wick or what have you. That's how I expand it in the event that it breaks. Then on the upside, I do the same thing. So I'm going to take this broadening formation, and in this case, there's another 3 candle right here. So that's where I'm drawing it. So when I'm looking at this, there's several things. Price higher low, it held this level even with a sharp decline. We're near the bottom of this potential broadening formation. All of these factors to me are indicating that we're likely to move up, and then we've got the run into earnings. So for tomorrow, Baidu is a great mover. It's got a lot of range, on average 8 to 9 points. So if you're interested, that's one of the top plays for tomorrow and possibly into Tuesday. It's dirt cheap, anyone can buy it. Apple is also, and I've got a couple trades on Apple that I'm looking to take here. To me, when I'm looking at this, I see a couple things. We had this decline wasn't overly sharp. It came back right in this area of all of these inside candles again. Market likes to revisit price structure. So you can see that pretty clearly. We also have an area where talking about this price reversal, market makers come in, fake out the people who think that's the original long, bring price back down. This is your real trend. A little bit of a sell-off, come back and test, which again, if I extend this out, we can see where did price come, right into that consolidation range. So if I'm looking at Apple, and let's just look at it on the weekly chart here too, you'll notice that on the weekly, look what happened. Almost, to the penny. Price came back and test, buyers stepped up. Strat setup says on the weekly chart, we go long on the break of that previous candle. You can get in a little bit early off the daily chart, and Sarah talks about this, Sarah Sabatino, quite a bit in some of her videos about looking at the weekly and how we can get some early entries possibly on the daily chart. So in other words, if we got some follow through buying tomorrow, we could take an entry for that weekly hold tomorrow, even though it hasn't necessarily broken that 129 level yet. So targets, what would I be looking for? Well, looking left, my first target is going to be right in that 131 area. And interestingly enough, we're again back in this range of an area where buyers and sellers are fighting over price. And you can see here when it zipped up, where did it come back to? Right in the same consolidation area. Price will keep returning to those areas over and over, especially as it's stair stepping in a new trend. So that would be kind of an initial area I'd be looking for, then up to right in this 133, and potentially on the week, let's go back to the weekly real quick to see. On the week, we could get up right in this 136, I don't know, I guess target of about 137, I would say. So where would I buy? What strike would I use if you're trading options? I've got some Apple calls, the 125s on. And those I bought, I want to say last Tuesday or so. But if I were trading this tomorrow, of course, it depends where we're opening, but you can with options if you so choose, especially with something like Apple that, is a fairly clean trader, isn't very expensive. You could buy the magnitude, so 130 or 131 calls. Since prices move quite a bit from where I got in, let me just look at something. And what you should know when you're trying to determine, because this is a question that comes up a lot, is how do you determine what strike to buy? You'll want to have on your option chain open interest and volume. And you're going to want to look at that option chain. Now, something like Apple, there's going to be a lot of open interest and volume on a ton of different strikes. Other things that aren't as liquid, like W, which is Wayfair, or things that have huge price movement like Amazon, you're going to want to kind of stick with the most open interest and the most volume. But if I'm looking at the 130s, there is almost 70,000 of open interest and almost 41,000 of volume. So as far as strikes go for next week, that's got probably the highest amount of interest. So if I were doing this trade tomorrow and putting my entry in, that's probably the strike I would be buying, the 130s. And again, your targets would be in this area. On the longer term, looking at the weekly chart, I like this for a swing, and you'll see a lot of repetition. I posted something on Twitter about Amazon. I'm not going to revisit that necessarily here, but it's the same exact type of setup that we're looking at on Apple. And for those of you that have never traded Amazon because it is a higher priced mover and you're potentially scared of it, I understand that. If you're interested in that trade, look at my post on Twitter. I put a couple different strikes out there. One's $7 and one is $3. They're both out of the money, but one's out till June and one's out to July, right before earnings. So you've got a lot of time, and Amazon can really move. That's the reason I chose those out of money strikes, but they should be plays if anyone's interested. You can certainly take One thing I would say with some of these longer term swings, and actually one of my buddies taught me this, is when you're taking them, we all get freaked out by price movement, or most of us do anyway. You kind of got to look at, especially with options, what is the amount I'm willing to risk? And I don't care if I lose 50% or 100, because I don't want these short-term movements on a longer term swing to stop me out. And so that's what I started doing. You just put the trade on, you leave it there and let it do its thing. And you just know that capital is already allocated, and you let it go. Because stops with some of these things, as you can see with the market structure and the way market makers will run stops, 9 times out of 10, you're going to end up getting stopped out, at least with options. But what we see on the weekly is we came back through, tested this area. We had a bump up, came back, tried to fail. And what happened here on the weekly chart? Buyers came in aggressively. So again, we need to see the follow through buying, but assuming that happens, out to July, those options are dirt cheap. And I'm looking at the July third week expiry with options. For me, that go out a month or 60 days, I am always buying what we call the regular way expiry, meaning the third week. And the reason is that's what swing traders do. In the old days, there was only ever third week expiries. There weren't weeklies and dailies and all this. That was it. So that's why I use those options. Then I look for the high amount of open interest, so on and so forth. And I would be shocked if Apple doesn't get to 140 by July, 16th or whatever it is, or 21st, I'm sorry, I think it is. And they report the 29th. So you got a lot of things working in your favor, assuming we got follow through, markets are strong next week. We got earnings end of July. That's not an overly big price movement from where we are now. I think that trade's got a very big significance and possibility of working out. The options are $1.37. So again, anyone in the room should be able to take a position in something like that. Again, my advice would be, if you take a position next week, take a very small position, 1 or 2 contracts. Or you could sit the week out, because we have so much economic data. Sit out and see how markets react. If you miss out on some of the price action, that's okay. You just wait for a retracement, and that's when you get in. Do not chase. Do not chase, do not chase, do not chase with options. You'll get killed. I did it so many times. It was like beating myself over the head. But you realize markets always retrace. So being patient is probably one of the best attributes you can have. Next setup I want to go over real quick here is snow. Again, you're going to see a lot of similarities in these charts. We have a situation where snow has just gotten killed. If I were to draw, let's just draw our broadening formation here. Look at the weekly. It would actually be easier to draw it off the weekly chart because it's just cleaner. I've got my 3 candle, and you see, I draw in this case, I am going to draw it kind of off these wicks right in that area. And then on the upside, when you can see a trend, so here you can clearly see, right, these different wicks. I will often draw right on the wicks of that trend, just because it's so darn clear. When you see patterns, markets travel in patterns, it's not random. And see how price on this daily level has hit that so many times. I mean, that's a really strong level. So to draw your broadening formation. So here we see price didn't even come all the way down to the bottom and it reversed. Does that mean that for sure it's going back up through the right? No, it doesn't mean that. But just like Baidu and some of these other charts, it really couldn't fail much beyond this area. And then we had a lot of buying interest step up. And one other thing I'm going to point out is this 3 candle in and of itself is a broadening formation. Now, if you draw it like this, that's awfully steep. You know, that's what I mean when you're drawing these things. If it looks a little crazy, it probably is. However, that 3 is its own broadening formation. You see here, it touched these levels a bunch of times. The other thing you'll notice with price is it will go above and below these trend lines. Trend lines are incredibly powerful. If you don't know how to draw them, just take a daily chart and start practicing areas where you see price touched. Again, not an exact science, but over time you start to get a rhythm and a feel, and we see that price has broken on the other side, which it often does, come back down and then started to reverse. So snow into this week, the strike that I'm looking at is, what do I have pulled up on my option chain? The 230s. And I think I took that off the weekly chart. Let's just double check. Yeah. So what I did is looked at, okay, that we get a break here, and my target is going to be right up here. So I just chose the 230s. They've got a decent amount of open interest. Snow isn't as heavily traded as some of these other guys, but Snow can move 13 points. I mean, this guy is mover and a shaker. So what I'd like to see is that we're above this close area of roughly 209.99, and then a move up to 232. It could do that in one day. So the price on those options, the May 21, this Friday's expiries, is 230, and they are $1.30. You know, obviously keep in mind, we don't know what's going to happen between tonight and tomorrow. So if futures are strong and we gap up, you're going to see that those option prices are obviously more expensive. Don't chase it out of the gate. Wait for it to do a retracement on a smaller time frame. And these are the small TTOs that sometimes confuse new traders. So if I'm looking at Snow, let's say in a 5-minute time frame, I draw the original trend like this, and then it took some sideways and went back up. But TTOs are any of these black candles effectively that didn't cause price to start reversing. So TTOs can kind of happen in one of two ways. They can be what I call a time consolidation back to trend. So here, yeah, we had a little bit of a trend down. You could have picked it up on the bottom of that chart. You know, like if we go down to a 2-minute, you'll see on a 2-minute chart that you could pick options up on a down wick when we see buyers step back in. But a time correction simply means that price kind of went sideways over to the trend. So here we see price really didn't go anywhere in this range, right? And it tried to kind of correct back to trend, but it was strong enough that buyers picked it up before it even reached that trend line, came back in here, chopped around, and continued to move higher. So don't chase out of the gate. I'll give you a quick overview on how to trade gaps too, because it seems we virtually never open flat anymore. It's just one series of gaps after the other. I'm going to go over one more setup on the weekly, a couple more swings, and then we'll open up for questions. But Tesla, if you're a newer trader, be careful with Tesla. It moves an awful lot. It can really scare you. The only reason I'm putting it on here in a more general setting when I don't know people's experience is simply because we have been beat up. So your likelihood, even as a newer trader, can be somewhat stronger to get that direction correct, because my guess would be that we're going to start moving on up. Again, if you look at this chart, you'll notice right out of the gate here, we've got a bunch of inside candles right in this range. We have an inside candle on the daily. These are relatively easy trades most of the time, in that if price breaks, it'll usually continue in that direction. If it breaks to the upside and then reverses down, that's how a 3 candle is formed. You always hear Rob say a 3 is a failed 2 in any given direction. So let's say price gaps up, starts to move higher, and then turns around and fails below that wick. That's how you form a 3 candle. But The reason I like this, again, we look at that same market structure. We had this area where market makers chopped it around, made some money, took price down. Money, stupid thing. Why is this doing this? It drives me nuts. Okay. So right in this box, consolidation, we see price broke down. Where did it come back? Came right in this area. Then it decided to go, market makers took it back up, trying to fake out longs that this is the beginning of the move. Nope, we're going to stop y'all out. Then we're going to go up again, stop y'all out. This is, to me, a mature higher low. Of course, we need follow through, right? Like this is not a bullish candle right here by any means. However, buyers did come in and didn't let it fail below. We need follow through. So we need to see that we're above that 589.74 and buyers step up and start taking price up. Assuming that happens, Tesla's been selling off for so long. If we look at the weekly chart, you know, your strat setup would be you'd effectively need for it to break 665. That's an awful long way from where we're at. So that's where I go back to a smaller time frame like a daily, and I say early entry here, right around 591, and then I start putting my targets out. Tesla moves $35 in a day typically, so start stair stepping up, and I am looking at right in this range, you know, looking left, you see several touches. So I'm looking at the 650s. There's a bunch of open interest there, about 13,000. They are $2.17. So again, anyone in this room should be able to afford a $2.17 option. And if price is strong, again, very easily could get to 650. You know, the only thing that's not preventing, or that's preventing me from being super excited about swinging, is just the fact that we have all the economic data. So some of these that I originally marked out for swings, you can kind of trade it the same way, but not hold overnight. In other words, buy the option intraday, close out your position, and then get back in the following day if you don't want to take that kind of risk. If you are going to swing it, make sure you're using smaller positions, and you can add on any of those pullbacks. So one other thing I'll talk about is gaps, then we'll have some questions. I have a million more things I could go into, but I want to respect people's time. So people always ask me, how do I trade gaps? What do I do? And a lot of stratters, I've seen them post things about gaps negating setups and things like that. To me, I don't look at it that way, from the standpoint that market structure is different now. In other words, market's gap. That's just what they do. That's the way of the world right now. So if you can make your own rules. If that negates your setup, then I'm 100% with you. That works for you. For me, what I'm going to do is observe what happens. So let's just take Tesla, for instance, because Tesla is a gapper and a big gapper. What you'll want to do is look at your daily chart here, and you'll want to mark out some key things. So I often do this on my daily chart before market open, and I'll go in, I'll mark highs and lows from the previous daily candle, okay? And then depending, I'll mark often the open and the close. On this doji candle, that's what this is effectively, meaning there's a little body with some big wicks. I'll probably just throw, in this case, the opening level on, just because if I'm trying to mark out two levels that are super close to each other, it gets hard to see. So I mark it out like that. When I get up in the morning, I look at pre-market to determine, and I'll give you a couple pointers on what clues those give you, whether I should move that maybe down to the closing area underneath. But what you'll see is Tesla gaps up. This is the opening price right here, right? And I've got this level marked. Let me make this just a little bigger so it's really, really clear. So what I see is Tesla opens, and I would say 8 times out of 10, that candle's going to come back and feel out the previous high or part of that gap and determine what it wants to do. In this case, that's exactly what happened. So you see this little wick right here at the bottom. Price came back and tested. It wasn't weak enough to get to the highs. It stayed higher than the previous day's highs. That's a big sign of strength. So if I'm looking at the daily, obviously when this opens and starts moving down, the candle's black. But when I see that reverse and start to go, you're probably using red and green candles. So when you see it reverse and start to go green, you jump in. That's a really strong signal on a daily chart, which is one of the longer term time frames. So that's kind of how I play it. I wait and see where price wants to go, and I let it tell me off the daily chart. It's not that complicated. It really shouldn't freak you out as much as it does. But this candle is very, very strong. There's other times we'll see that these gaps test. So like in this one, let's just mark out the close here. We see that price opened way at the top, right? So that was a big gap, 661 to 674, 15-point gap. In this case, we're just observing. If you're a more advanced trader, you know that you can short it back to, and I usually start with the wick. So one trade, if you're a little bit more advanced trader, is then to take, if it looks weak and starts failing, you can short it back to those highs and potentially back to the open of the previous day. That's what we call a revision to the mean, meaning price expands and contracts, but it always comes back to an average. That's all I mean by revision to the mean. So this is more like a revision to the mean trade. In other words, back to the close. And then you see buyers picked it up here, but it wasn't strong enough to even overcome those highs. So you just start observing on the daily chart what is happening. And that's how I got confident with trading gaps. I just sat there and observed. It's not that complicated. They're going to do one of two things: fill part of the gap and be too strong to fill all of it and keep going up, or they're going to completely gap fill and maybe overshoot a little bit and just be weak. And then every now and again, you'll get, I don't know, I'm seeing it here, you'll get a very special kind of candle. I think Amazon might have had some of these recent. Let me just see if I can find this. This is almost perfect, not quite, but you get what I call shaved body candles, meaning there's almost no wick. If you see something like that where buyers just step in out of the gate and take the thing up, get into that for a long, it's generally going to be a really strong day. What that's telling you is not only are shorts covering, if anyone had gotten short the night before, but there's natural buyers and there's a tremendous amount of strength and momentum. It's a fantastic long setup. And sometimes those are the types of trades you can hold on to for the entire day. So that's my 2 cents on gaps. I know it's a lot of information in a short period of time. What questions, things do you all want to review or go over in the next 15 minutes or so? Don't be shy, just unmute too. It's an open forum.
Can you address if you have a different time frame continuity from what you expect to see during the day?
Oh yeah, sure. And so right now you're gonna have that, right? Because a lot of these will be negative. Now for me, I'm not telling you this is the right thing to do. I watch time frame continuity, but it's not as important to me. Why? Because I tend to be, I guess what I like value moves. In other words, I like to buy things that have been beaten up and look good for a reversal. That's just my style. There is a lot to be said though. Let's take SPY for instance, okay? So I remember watching SPY with my buddy Robert when it was right near this, we were waiting for it to break through 400. And obviously you had full time frame continuity and momentum to the upside, and look how far it went, my lord, all the way up to 423. So I'm not at all advocating that time frame continuity doesn't matter. It certainly does. And these trades, I mean, you can't get more legitimate than that. The trades that we've got over here, obviously time frame continuity is potentially going to be in conflict. And the only time I'm really comfortable with that is when we've had, you know, in a case like Tesla, I'm going against the grain, but let's draw out this broadening formation, okay? If I'm drawing the broadening formation here, and I'm drawing it off this more recent 3, I mean, that's a little extreme, so I'm going to draw it off this other 3. To me, that looks like it's at the bottom of a broadening formation, and we see there's several wicks that have touched that downtrend, and we have an inside candle, right? So if we get a break above that inside candle, to me, that's showing strength out of this whole consolidation range. Those are the times I'm comfortable taking, I guess, kind of counter trend or counter full time frame continuity trades. Reason being that I know for time frame to come back into continuity and the upside, that change has to start somewhere, if that makes sense. And we can even drill down to.
Yeah, the reason I ask is because I got killed on Friday because I was trading with time frame continuity where everything had been red for the week. But of course, the entire market was up on Friday, so I just got killed.
So tell me about, let's talk about it. What, oh, one other thing real quick to point out on Tesla. So you see this inside candle. If you go down to a smaller time frame like the hourly, what do we notice here? Low, high, higher, low. We haven't made a higher high yet, but we have the beginning stages of an uptrend. So that's a positive. But what stock were you trading here?
Oh, I don't have the account pulled up or anything. I don't want to take the time to look at it. I tried several things before I finally gave up around noon, and let's look at
the symbol. You don't have to give your exact things, but I think these kind of things are helpful to everyone.
Well, one of them was the IWM.
IWM, perfect. Let's take a look here.
Yeah, and I think last Friday was very, very grindy. So
yeah.
Well, again, I was looking at the red week, the red month on a lot of different things. I thought, okay, well, it's just going to keep going down, and then boom, everything just exploded on Friday.
Yes, yeah, it sure did. And actually,
so I guess what I wanted to say is time frame continuity doesn't always tell you what's going to happen.
No,
I'm
not
just curious how you interpret that.
So I'm sort of weird, and I don't want to give you any information that's not strat-y, I guess. But because I know how market structure works, I don't really care about time frame continuity. That's just me.
That makes perfect sense. I totally understand.
And the reason is what I'm looking at is what are market makers doing and what's the overall market structure, and then what's my strat setup getting out of it. So if I'm looking at IWM, for instance, on the hourly, what I'm going to notice right here is there's an awful lot of inside candles going on. And I'm noticing buyers tried to take price outside that range and failed pretty sharply and came down. And I'm noticing inside the consolidation box that we have a series of lower highs, right? So I'm going to look at this and be bearish, even though right in this area, you know, we're looking at probably full time frame continuity, the upside, depending on where we're at. So I'm looking at the market structure, I'm identifying these areas, and I'm saying, okay, price is likely to go down. I'm not going to enter short probably on a first leg. I'm going to wait and see what price does. And what I see here is price comes back up off that instant candle and fails. So where's my target going to be? Well, my first target is going to be this area right in here of inside candles. Then I'm going to look to that next area that buyers and sellers were fighting. I'm probably going to be, and so on down the line. And then as far as the reversal goes, or trying to determine what happens next, because that's always what we're doing, right? We're trying to form the right-hand side of the chart. What I'm going to notice, and let's put pre-market up here, because sometimes these pre-market charts will give you a lot of clues. And some strategies use pre-market, some don't. you know, everyone's different, but this white area on my chart, I'm gonna change that because it's making my eyes go wonky. Hold on one second. Make it darker just because it'll be easier to see, I think. I think we need it to be that dark though. All right, so what I'm gonna notice, and Friday, this is our Friday chart right here, right? Yeah, so what I'm noticing Friday is we see price stair stepping up pre-market. And we see it had started that trend up on Thursday, right? And then it continued pre-market. And what I'm noticing also about pre-market is this level right here, in that after hours trading doesn't hold a ton of weight, just because you don't have that many institutions all that active, you know, oftentimes a bunch of traders that don't know what they're doing, but it can give you a clue. And the clue here is we ended up right in this area, and then price at pre-market. Now this is really important stuff, because pre-market, which is 4 a.m. New York time, I believe, institutions come in and start moving stuff around. So what I notice is price comes down and tests. It's too strong really to get even to the highs from after hours trading, and it continues to stay above that area, right in this level. Even when this 3 tries to go down and expand the range, it's still too strong to even come to that level. That's giving me a clue that we're likely to start running up. And if I'm looking at the daily chart, another thing to notice about price, the behavior on this big bearish candle, we had this inside day. Sellers tried to take it below 1140 area, but price was too strong. It couldn't even get all the way down there. So that's going to give you another clue that the potential direction the following day is actually back to the upside. So for time frame continuity, don't hourly and daily override. You know what? They are, you know, if hourly and daily are to the long side, yeah, in theory, but you got to understand price moves up and down. So change in price direction has to start somewhere. And that's what the difficult part of it is, right? Because we can't just look at time frame continuity and expect that's going to continue forever. We need to start looking at charts and determine, how do we know when we can take a trade against time frame continuity, and when time frame continuity is also likely to change. And that's a bit difficult skill in the beginning. Like I said, I will post a video kind of about market structure. It's not necessarily stratty. So if you're just in the beginning stages of strat, don't start getting lost in all this yet. But we all know that not every strat trade works, right? So how do we figure out what strat trades are likely to work? We got to look at kind of the bigger picture, and what is price doing, and where's consolidation, where's range expansion. These things all take time to learn. You know, I would start by just, with some of the stuff, start looking at daily charts on the things you like to trade and making those observations. I mean, when I'm looking at this chart, of course, I've been working on this for quite some time, and I mean, I'm a person that I'll never stop learning. You can't ever perfect trading, but start going through the charts you like to trade and making those observations and marking those things out. What do you see? You know, here's the area where buyers and sellers were arguing over price. Where did price go back to when it tested and reversed? And I guess that would be another thing that maybe in the beginning you wouldn't recognize. But when I'm looking at this chart right now, like IWM, and same with all the indexes, I'm saying, okay, well, it came back and tried to test that last battle area and it didn't fail. So I'm expecting follow through that next day. Now, that doesn't mean I'm going to stay stuck in that vision. In other words, if I'm expecting that, and price is telling me something else, I'm going to do what price is telling me it needs to do. But I'm going to look at that and say, that's really interesting. You know, here's another area I see that's key on the IWM chart, right? We had a low, we have a higher low here on this candle, and then a higher low still. So these are all little nuancy things that you don't really catch on to necessarily in the beginning, but over time you start to see these things. I love DKNG, and it really did a thing on me for 2 weeks in a row. It gives DKNG. Yeah, sometimes what happens too, and believe me, if you feel like you get into a trade and every time you get into it is when the market makers know you're there and stop you out, that's normal. Every trader has felt that way, and it sucks, but that's just what happens when you're learning. So if you're feeling that way, it's normal. That just means you need kind of some more training on how to read charts or how to read strat setups. Why is it doing this? You know, when I can't get that, when it grips the whole chart and I can't get it to draw. Come on, I think it's my mouse. I think this mouse is crappy. Okay, so DKNG. And I want all you guys to do this. Start kind of marking out these levels where you see these inside candles, or even where you see outside candles. Look at all these range expansion candles in the same area. I mean, you start to notice these candles are different. They're unusual. They're doing something that isn't trending. So then we got to ask ourselves why. So Kevin, tell me, what did you do with DKNG? What happened? It's probably helpful for folks here. If you're comfortable. Yeah, and you can just unmute and talk if you want to, if you're comfortable just having a discussion. Because believe me, whatever questions you have, there's 50 other people that have the same question. So for those of you that are willing to speak up and go through it, I mean, don't feel stupid, don't feel humiliated. We've all done it. I've done these things 1,000 times. So you're not doing anything I haven't done before.
Can you hear me?
I can.
Okay. Now, like you had mentioned, DraftKings has been getting beat up for 2 weeks. And
Yes.
I'm like, well, it's due for a reversal.
Yes.
But it didn't. And I took DraftKings to go at least, I think it was 50. I think my strike was like 57 or something like that.
Sure.
It never moved. It never went back up.
Now, do you remember what when you took that trade by chance?
That was no, because I was, since it went backwards on me, I got out.
Gotcha. Okay.
Yeah.
Okay, so a couple things here. I just want to throw this out there because there's two things that happen when you're first starting. And I don't know, you might have been trading for a while. I don't know. How long have you been trading, Kev?
Last year.
Last year. Okay. So, and realistically, they say for you to become somewhat good at it, it usually takes about 3 years and oftentimes 5 to 10. I mean, I don't want to depress anyone here. There's people like Sarah. I think Sarah's been trading a couple of years. I've been trading a couple of years. I'm not saying by any means that I'm the greatest trader on earth. I'm not. I'm constantly learning, but I'm way, way better, obviously, than a year into it. A year into it, you're just starting to get a clue, you know, and I would say 2 years into it, 3, 4, I mean, everyone's got a different journey. And oftentimes it takes 3 to 4 years to even see these chart patterns. So my hope is if I do these sessions, I can point out some of the things that were never pointed out to me that help you understand market structure. It'll speed that process up. But the point I'm trying to get at is when we're newer traders, we see price go way up. For instance, we'll come back to DraftKings in a second, but Home Depot, for instance, if I was a newer trader on Home Depot, I probably would have been trying to short this dang thing the whole way up because it's like, how can it keep going? It's got to short it. And we were talking about this with some of the traders I trade with quite a bit, but we know, you know, you don't want to get short something like that until you get a sign. Your sign to short it was right here on the shooter, but it didn't go all that far. Meaning with DraftKings, yes. And like with Tesla, all these stocks, they've been beat up. Are they ready to move back up? It looks like they are now. But when they're selling off like that, you can't, I guess, say to yourself, which we all have, so I'm not criticizing you. It's been beat up, so it's ready to move back. You need to wait for that definitive sign. So two things I'm gonna point out here. One, move this up. Here's another range where we see these inside candles. So if I were looking for a bounce on this guy, I'd be doing a few things. One, this isn't the cleanest downtrend I've ever seen. That's horrible, but this downtrend over here is a little cleaner. You see how if you can see it with your eye if you draw that downtrend. But if I had been trading this to the long side, the areas I would have been willing to long it, this would have been one potentially. And because I'm seeing all these inside candles and what I see here, and this is the thing you have to start to learn. What is the candle? Each candle tells a story, and then each candle in the context of the surrounding candles tell you yet a different story. So if I'm looking at this, I'm seeing, okay, here's this other area where buyers and sellers fought over price in the past. And what I'm seeing is buyers are stronger because they picked it up off this level and didn't let it fall back through. So if I had traded it long, that maybe would have been one area I'm looking at. And my target would have been, well, this candle wouldn't have been formed yet. So my target looking left would have been kind of stair stepping up. So let's assume we didn't get in on this candle because this isn't the most bullish candle I've ever seen because it's somewhat doji-ish. We've got long wicks on either side, but strat setup 2-2 reversal, you're certainly allowed to take it long here. So let's say I take it long here. My stop goes here, right below the wick. And then I just start stair stepping, looking left. So first target's here. Next target's right in this area. And then I hit my target, I'm out. And that's part of the thing too. And again, Sarah, who was instrumental in teaching me a lot of what I know, is incredibly good at this. She marks out her target, she's out, she takes her money and banks it. And we can all sit here, and I've done it too. This is normal human behavior where you know, it could have kept running. And if it had, then you start beating yourself up. Oh, I missed out on this and that. No, you didn't. You planned your trade. You knew where your stop was, you knew where your target was, and you're out and you made your money. And that one of the biggest challenges, I think, and this is where the strat is so amazing, is you can plan your trades. You know where your stop is, and you know where your targets are, and you know what your trade plan is. And that's half the reason traders fail, because they kind of go into something like, okay, this looks like it should be at the bottom and I should be doing this, without any real evidence on the chart itself. And the strat gives you the context and how to frame those trades. In other words, where's my stop and where's my target? So if we continue moving on down the line here, a possible area that I would have been looking at to take this long would have been off this hammer candle right here, because that also hit the same range and it went back up. And my initial target would have been probably right in here, looking left. It didn't quite get here. And that's the other thing, as a new trader, you need to realize sometimes these things will hit those areas to the penny. I mean, it'll freak you out how well it works. Sometimes it'll be like this, where if this was your day trade, you know, so getting in right here, that's your day trade. It didn't quite get there, but you still had over a point of range. You wouldn't want to let that go all the way back against you. That's close enough to your target. When you see it start to reverse, you take your money and run. But learning when to hold on and when to take profit is also somewhat of an art, so that can be hard. But then as far as going long, our next signal is potentially, or was potentially, on Friday, when price reversed on that candle, 2-2 strat reversal back up. Okay, And why? Well, we see a lot of, and I don't want to say support. I like, I mean, really, it kind of is. But what I look at it as is where's the area that they were fighting over price last, and it was right in here. And so price came down to start up that fight again, and buyers picked it up and didn't let it decline. That's a bullish sign that maybe we're turning around for a reversal. So if I were taking this trade, let's say tomorrow, I'd be looking at getting in, if it gaps up, looking for it to pull back possibly to 45, and then I'm looking left if it's a day trade. My potential target is right here at 47.71. As far as swinging something like a DraftKings, I'd want to see it do its junk, because usually when trade starts to reverse on a bigger time frame, you get some of this baloney where you're not, especially with options, you're not going to get a whole bunch of great movement. And again, the way I handle this is by drawing out that box and we see a bottom here, we see price come back up and test the mid-range of the box. So the real move is getting along here and then riding it up. So, and again, the reason these double bottoms and double tops and that kind of thing work is those are when market makers are squaring up books, they're getting things repositioned, they've been, as you're long, they're short the whole way up. So when you start to see price not going anywhere on the upside, that's a clue that we may be reversing direction. Price hasn't gone anywhere. I mean, it just chopped around for how many days, like in this region. That's when I start drawing out my little box, mark it up, wait for it to fail, come back up. In this case, it tested the underneath side of the box and boom, it failed. The same is true for reversals on the long time. And this kind of scenario happens over and over and over and over and over again on any time frame. So if you can get good at spotting these bigger areas where price is screwing around and then letting it do its thing, like here, it's gotta be my mouse. If I'm marking that out, I'm waiting, and then my potential strat trade for the real movement, I can wait for price to get outside this box too. And that trade would be right here where it kind of comes back and tests, but isn't weak enough, and you can just ride it on up. But that's really, looking at that bigger picture is really how you start to see, and it'll show up in areas like this. And this happens on any time frame at any given time, on any stock, they all move this way. Here on a 1 minute chart, you see that same kind of rigmarole here where it's just not doing anything. And we had price come up. So, one of the things becomes, is this area an area where price is going to reverse and keep going lower? Well, that's what shorts are betting on, right? Longs are betting the opposite. So when you see this and you're going to know because there's a bunch of inside candles and it just looks like kind of ugly on the chart, like it's not doing anything. We divide our box in half. Shorts are thinking, hey, it's going to break below. It doesn't. This has helped me tremendously. Wait for price to break out. Price breaks out to the upside. I'm not going to get in on this candle because I know it's going to come back. And it sure does. Comes back right here. Buyers pick it up and then you're off.
Question.
Yeah.
When was the last time DKNG was that low? I mean, I didn't see anything that, to me, not knowing enough. But...
Sure. So the last time was right in this area where buyers and sellers were fighting over price, where all those yellow inside candles are.
What date is that?
So this is November 2020. Yeah. And right now, Kevin, where we're at, seeing that it tested the top side of that range and is starting to push up. And then if I draw my broadening formation, to keep in line with what the strat teaches, You draw it in a couple different ways, but let's just say I'm using this inside candle here, or outside candle, this blue guy.
Right.
And again, ideally, you want to draw it off an outside candle. Why? An outside candle is a range expanding candle. I'm going to draw it like this to start for a few reasons. If I draw it way up here, I mean, can it get there? Yeah. But is it going to get there like tomorrow? No. So I'm going to draw my more narrow one, and then maybe I'll make one that's off that inside candle that's a little bit larger by cloning that line and moving it up. So if and when price gets up here, I know where the next target is.
Right.
But what you're seeing here, this is pretty reliable. And that's why I'm saying I am very excited for next week, because a lot of the charts look like this, where it's come back to a significant region where price was being fought over before. And it's not only held that, it hasn't come all the way back through, and buyers have picked it up. The thing that's just giving me a little bit of pause is we could get a scenario where you have a couple days that are great, and then our friend Jerome Powell comes out on Thursday and says, like he tends to, things that bring the market back down. And now, you know, if you're swinging it for a move back up through that broadening formation, it just hammers right back down and does something more like this, where it's trying to get that locomotive going for that next move up. So I guess what I'm trying to say in a long-winded way is, if there weren't a lot of economic data this week, I'd be really, really excited and maybe getting a little bit aggressive. But because all this data is like earnings for the market, you just got to use a little bit of caution. It could be great data, and that could help the move up. But just like trading a stock around earnings, you just got to know it could go either way, and we don't know which way it'll go. But this is what y'all need to start doing, looking at these charts and just mapping out. And for anyone that wants to get better at this, mark out some of these charts and DM them to me. I can't right now, unfortunately. I used to do a Zoom meeting every day to trade with people. I just can't do it right now for personal reasons. But for those of you that want to get better, it's homework. I mean, I didn't learn market structure in this manner by just trading during the day. I have put in boatloads of extra time studying these charts to help my brain conceptualize. And that's really what it takes. Yeah, I try to draw my broadening formations off the threes, Gabriel. I try to, because threes are range expanding candles to begin with. So, but for anyone that wants to mark up a chart and send it to me, you know, like DM me on Discord, I'd be more than happy to look through it for you and say, hey, you're on the right track. I would switch it a little bit this way, those kind of things. And I'm more than willing to help, but just understand this is a job where 97% of the people that try to do it fail. Why? A, they think they know what they're doing and they keep blowing up accounts and they run out of money. Or B, they give up. So as long as you don't give up and you don't throw all of, yeah, I'll throw my Discord link in there, all of your money up front into it and lose it all, you can be in this game. It doesn't matter if it takes you a month to learn it. Well, it'll take longer than a month. If it takes you a year or 7 years, who cares? Don't give up.
Right.
Because it is worth it in the long run, I'm telling you. And for any of us, you know, even for myself, there are constant things that I want to get better at. This isn't I know how to trade, now I'm like the best trader in the world and there's nothing I can learn. No, it's never works like that, okay? It just doesn't. This is the thing, it will beat you up. If you don't, thank you for posting that for my Discord. If you don't cry about this at some point, I'm being serious. Like I've talked to guys too. If you're not brought to tears by the frustration level of learning this, you're not putting a lot of effort in. Know that's normal. This is not a natural skill. The markets, the way you need to trade them is the opposite of what you'd intuitively think. It's just not easy. So let's see, someone else asked me, when you day trade options, do you go all in or start with this? You're welcome. Or start with a starter and add when it works. Also, you said the best entry is after there's a 1 minute or two down. Do you go and enter the next one if bar goes green? Break it. Okay. So when I day trade options, that's a good question. I usually go in with a starter and add and build the position. unless there's just something outstanding, and I'll show you what I mean by that, because there was a good example, I think, on Amazon. And again, even if you don't trade Amazon, just take this with the idea that any chart can do this. I just happen to trade Amazon quite a bit. Okay, so I think it was this day. Yeah. So there are times I would go all in. And I shouldn't say, let's say, so on Amazon, I don't trade, sometimes I'll trade up to 10 contracts, but that's rare. Like I've only done that a handful of times. I'll usually trade 1 to 3, okay? And generally speaking, I'll start with 1. On a day like this day is a day where I might go in with 2 or 3 and be willing to add 1 or 2 more because I have a lot of conviction, and I'll explain why. When you get, markets are about 2 things, okay? Revision to the mean, meaning when they get too far away from historical norms, they're gonna retrace and come back. The other thing is markets are about extremes. So the reason I like to, or I don't mind trading against full-time continuity is when I see a situation like some of the charts we've looked at here, where things have moved so far that we see a strong likelihood of price reversing. And I know I'm potentially in at the bottom of a trend. So I'm getting in when other people are still looking at it like it's trending the opposite direction. So like Warren Buffett, for instance, he's buying when other people are selling. He's buying at the bottom. Okay, so we're getting in when other people are fearful. I'm being greedy. When other people are being greedy, I'm being fearful. It's that type of concept. But if you see a stock that has a boatload of range pre-market, meaning after hours, we're all the way up at 31.92. Pre-market, we're all the way down at 31. That's a massive amount of pre-market range. So granted, for Amazon, that's what, like 70 points. If we're trading Apple, that could be 3 points or 2 to 3 points. Whatever that particular stock is, it will have its own general way of moving in a general range called the average to range. So what I'm noticing is we started out all the way up here, and near market open, we're right at the bottom of the range. You know what? I'm taking this thing long, and I got a ton of conviction in it. And I'm probably going to take a fairly sizable position trade, and my target's going to be the highs of the after hours trading right here, because we're at an extreme. We're at the extreme of that range. 9 times out of 10, price is going to come back up to that range and test it and determine whether it wants to move higher or not. And I'm done for the day. So in most cases, I'm doing more of starters, because what I want to do is watch the trend and add as it keeps moving. And this is, it's got to be my mouse if it's not somehow grabbing the. So a couple things, and this is, I guess, another good point to share with y'all is when you get a move in any direction, 9 times out of 10, you're going to get a retracement of at least 50% of that move. And that's what you see here. So it had you got long, and let's say you wanted to hold it off a daily chart because you looked at the setup and thought it was going to go higher, which it did. And you're trying to determine, most new traders, what'll happen is you see, here's that same type of pattern we were looking at, right? Where you have the consolidation range, and this is going to freak you out, and you're going to think that it's coming all the way back down. That comes with time. And those are harder things to talk about, but this is also where, back to this idea of when a new trend starts emerging, and this is a new trend because Amazon had been selling off. when a new trend starts emerging, you don't have to get in right out of the gate. You can wait for it to, because it's always going to pull back. And sometimes the best entry is a little bit later. So that's one thing to think about. You know, if you're looking at this and you now know, okay, this is at an extreme because I'm marking out these pre-market ranges. I see that it's near the bottom. It's likely to go up, but I don't need to jump in out of the gate because it will retrace. It always retraces. If it's not retracing, that means that you're dealing with a short squeeze where so many people have gotten short that they're forced to get out as price starts moving against them, and them getting out is contributing to price going higher. Like for instance, I would say this right here is some short squeeze. Why? Well, there were probably some traders looking at this area as a double top and got short. And you see how these candles just go straight up with no pause. That's because short. When you see that where there's absolutely no opposing candles, that's short squeeze. And you can look back to the chart and see what happened. But for me, I'm looking at it long. I'm holding the conviction despite all this goofiness. And I certainly am not suggesting don't go start trading Amazon at the open. I mean, I've been trading it forever and a day. Don't do that. You'll kill yourself. However, whatever stock you're looking at, make the observation. Okay, we're in an uptrend. Okay, it comes back. Where did it come back to? Well, it came back about 50%, maybe slightly more. Then you notice this is like we saw in the daily chart. Okay, I got this wick down. Then I have all these other candles. They weren't weak enough to take that out. This right in here, if I can get my box to work, that's a tremendous sign that we're now going to start moving higher. Why? Little clue right here. We have a low, and then we have all these other lows that couldn't come anywhere close to this low. So those are my suggestions. For newer people, these charts, I promise you, they have a pattern. They do the same thing over and over again. Spend some time tonight, pre-market tomorrow, just going through these charts and marking things up. DM me the charts, we'll go through them. Okay.
Hey, Jen, quick question.
Yeah.
As far as your stops, do you put them on, like, say if you trade an option or Amazon option, do you put them under your for the option premium, or do you use the underlying price for your stops?
So when I use stops, which is such a hard thing. The problem with, I usually do them on the option chart. Okay. The problem with it is there is some truth to, so how do I even explain it? There's times, oftentimes when I first started trading Amazon, I would put a stop in on the option because I would pull up the candle chart for the option and I'd throw a stop in, like a hard stop right out of the gate. The truth of the matter is it can be so tough because I have witnessed this. Like I was trading Wayfair one day and it was in an uptrend and I had a hard stop on and I took it off really quick because the other thing you'll see market makers do, like here's an example right here. If you got long, let's say you had looked at this and you said, okay, you draw your little box because you see, you said, okay, listen to Jen. I saw that she draws this box. I recognize that this is consolidation. I'm waiting for the break. Let's say you just took it on the break. And this is why I often won't do that, because what happened? You came back. Yeah, you got in, you put your stop right here. This is a market maker trick. That is a market maker running stops right there. No question. And that is a big, scary candle that's going to freak you out as a new trader. And you're going to be like, oh my God, and you're going to get stopped out. And so that's what's tough.
Yeah, I always struggle with that. Because
Yes.
and then when you don't put a stop, it might come a little bit further down, then you lose more
Correct.
money. Yeah.
Yes, no, I'm with you.
Gets me every day.
Yes, and that is the hard part about it, guys, is knowing when it's a market maker screwing around with you and when it's really a situation that you gotta get the heck out of there and call it a day. So a lot of that will go to, like, this is a very small time frame, right? Like, not a lot of people like trading the 1 minute chart, and that's fine. Myself and a couple other people in the room that have been trading together, we learned to trade on the 1 minute, so it's hard for me to get away from sometimes. But this goes back to the market structure idea and having conviction in the longer time frames. So let me just see. So for instance, let's just say we're looking at this chart and I noticed two things. I noticed this area and I noticed this area. Okay, so, and what I'm saying is this is an area where price is starting to reverse to go long. How do I know? Well, this has got the typical look to it. You got the chop and moved higher. Market makers are just chopping around in here. You can still get some nice day trades on things like Tesla and Amazon because they have a lot of range. But if you're swinging, you don't want to really be in this. So I'm waiting for the next, because usually it's that second area of chaos that really is the real trade. So let's say I recognize that and I get in here, but I'm taking my entry or I happen to watch it on a 1 minute. If I have conviction looking at the higher time frames, like an hourly and a daily, I'm going to hold true to that conviction unless otherwise proven. So I'll have those other time frames up. I'm not going to just trade on the 1 minute time frame. So I know maybe this isn't the best example, but let's just pretend that this corresponded with the fact that we're looking at market structure on higher time frames, and we got some clarity that this is moving higher. In that case, I'm just assuming most of these movements are market maker baloney. I guess the other thing, and again, this is critical in the way that markets move, back to drawing these boxes again, when I'm looking at a chart now and I'm trying to determine, and I in a lot of cases, unless I'm swing trading, I'm not going to watch charts. I won't have the hard stops in for that reason. But I'm going to draw out as I'm trading. This is what I do because it keeps me in the trade. I'm going to mark in and out movement. I will 9 times out of 10 just take a line and mark a halfway point on that chart because I'm expecting after a big move. So this moved from 31.26 to 31.91. I'm expecting a retracement.
Okay.
Yeah, so I'm going to put that line up on my chart and then I'm going to observe. And I'm going to observe that, yeah, it dips below. And then I'm going to keep watching that. That candle in and of itself won't get me out because what I really need to see is a close beneath that, a close beneath that. And really it's a close with confirmation, right? Because this, and there was no close beneath that. This candle closed beneath that line, but there was really no confirmation to turn around and pick price back up. And I'm kind of expecting that to happen because I've got conviction on the longer time frames. So what I'm trying to say is you almost have to look at this like noise. This is market maker noise. You've got conviction in the higher time frame. If you haven't gotten a close below that 50% retracement, there's no reason to get out. And then it moves back up. And it does a 50% retracement of this move. No close below. Okay, I'm still good. Then it moves back up. And it's so strong on this particular move, it does, I don't know, 25% retracement. And I've already marked out this level right here on my chart. And look how that comes into play. You see that? So these are new things that, once again, it takes time to recognize. But if you can start live, getting in the habit of, this helped me a lot. Anytime you get a move up, just take a line and throw it on there, 50% roughly. This is no exact science, just throw it on there. Expect price to come back. It will. Make another observation. Where's another area that price, it's about where prices congregate. Well, I know enough now to look at this and go, okay, there's a bunch of people thinking this is a double top and they probably got short. I'm looking at it and going, that's no double top, because this is a higher high than this. It's still, it could still go down, right? Like double tops aren't always perfect, but these are the things I'm talking to myself about on the chart. And then I'm also saying, okay, where's the next retracement? Well, it just made a move up, so I'm throwing a line here. But if I'm doing this, then I don't even care about this dumb candle, because the next one reversed. That is all that is a big, they do this all day long because these big scary candles will stop out the weak hands, right? But you know, if you understand how market structure works and you kind of mark this out as you go, you know what's likely to happen. You leave that line up. Oh yeah, okay, well, yeah, it retraced, but it didn't get below here. It's not even at 50% of that last move up, is it? Only like 25. Now you could throw another line here. And then when you see price come here, you're like, oh yeah, that's logical, you know? So it's just, it takes time. It takes time, believe me. I mean, I used to sit there for hours and look at these dumb things and go, how in the heck can anybody look at this and make any sense out of what's happening? That's how I used to feel about it. And how do we know? I guess one other thing I'll point out, then I'm probably gonna wrap it up just because we're getting long, but how do we really know when price is reversing? There's some things that we can observe about the size of the candles. So for instance, here, there's not as much of a clue. We've got a big candle, and yes, these are smaller, but here, look how big, look at the range on this candle, and then look at the top here, that's like half the range of this guy. When you see the candles themselves start to get smaller and smaller, anticipate price is going to retrace. Just know that's going to happen. And it's not always perfect, right? Like this is still a very sizable candle. However, you did have a clue right here. These guys were sometimes the clue will come before the actual deal, right? So these guys started getting smaller, and then you had this one, sometimes at the top of range, you get a big push out of a little guy, and that's almost your sign that it's going to reverse. But these are all very nuanced things that you're just not gonna understand until you've done it 75,000 times. So I don't care what anyone says. In my opinion, I was trying to figure out what I did with my color coding on the candles. It disappeared. But what I want to emphasize is there is something to be said for time in other words, screen time. It does make a difference because you start to see this stuff. It looks the same after a while. All right, but I'm going to wrap it up. Feel free to DM me with questions. If I don't get back to you right away, it's just because I will get back to you. I promise. I always get back to people. I try to do it promptly, but if I don't, just know I will. But it's on you. You've got to, there's plenty of stratters out there willing to help, but it's on you to put that work in and ask for the help. And don't be shy or embarrassed. Don't. We're all human. This is a game of emotion more than anything else, and keeping your emotions under control. There's nothing you could do that I haven't done probably 6,000 times and still will screw up on occasion because I'm human too. So just know that. And whatever questions we didn't get to, I'll try to do one of these every other week or at least once a month. So whatever questions we didn't get to, DM them to me. make a list of them, and we will get to them, okay? But thanks, everybody, for your time. I will post this. It's awfully long.
Thank you.
But I will post it on YouTube, and feel free to rewatch it. All right.
Thank you. Thank you. Thank you.
You're welcome, welcome, welcome. See you guys later.
Bye-bye, everybody.
I guess. Finally.